Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel. It's the final live session of the day, building a stock portfolio, and I am your host, Kevin Horner. Thanks for being here this afternoon, everybody. I'm joined by my friend JB there in the chat. You can say hey to James. He'll get to comments and questions I'm unable to, but as always, I'll try to keep a close eye on what's happening there in the chat. I, of course, see some familiar names and avatars. I've got Gary and Janelle. And I think I see Ricebird. Hello, Nurse Health Partners. Glad you're all here. Robert, great to see you all. So today we have noticed that our example portfolio has kind of been getting smaller and smaller little by little. We've had a few orders get stopped out, and today I'm going to take an effort to rebuild that portfolio with some of the trending segments of the U.S. equities market. That means we will not devote a lot of time to a review of the broad markets, but rather focus on those on really four sectors that are in trend situation right now. And we're going to look at some example trades to get those entered for tomorrow's business, so that we can have a larger example portfolio to work with as we go forward. Now, of course, we do need to review some of the existing positions in the example portfolio for minor changes, but we will expedite that process so that we can focus on building new ones. So with that, make sure you're following JB and me on X, James Boyd CS, Kevin Horner CS, and you want to be subscribed to the YouTube channel we call Trader Talk, so make sure you do that as well. Okay, let's get to these disclosures and then we'll get into the discussion. So first, remember that everything we cover for you should be considered informational and educational only. We're not making recommendations nor endorsing any approach to trading the market. What we're offering are insights and education of technical analysis and trading process that traders may choose to employ. We want you to use a personalized process, though. Focus on the process from a general standpoint as to what we cover here, and then hone those processes down to the specifics that fit for you. Comfort with risk, tolerance for price movement and volatility, dollars devoted to individual trades. My scratch pad in thinkorswim desktop will highlight the specifics that we work with. These, of course, are not recommendations for you. They might be a starting spot for those of you who are relatively new to trading equities and just getting your feet wet. If you're going to use them, do so and then work to decide if they continue to work for you, right? So if you find that things are a little more aggressive than you're comfortable with, make sure that you make changes. If they're not aggressive enough, make sure that you make changes. So we always have to be considerate of that as we are working through our plan and our process. So with that, let's take a quick look at the agenda. So normally we would review our market activity and go on from there and discuss some technical analysis and fundamental analysis concepts. Really what we're going to focus on, though, like I said, is working with the groups that we know are already in these trending scenarios. So let's get to the to the desktop application here. And I've got the S&P 500 up. I'm going to go ahead and close this watch list so that we can highlight the scratch pad here for you all. And then notice just how the S&P has really maintained the breakout. So we do have a bit of a bull flag development here. We're probably hanging in this range tightly simply because we've been waiting for more data, some more insights from the market. We do get CPI tomorrow morning. I will be on with you for Trader Talk at Market Open. We'll discuss what the market looks like then. So let's make sure we reconvene there. But additionally, we are seeing that the breakout and the holdup here happens to be carrying our RSI down below, not into overbought conditions. So we don't necessarily have the validation of this trend bounce just yet. As nice as that appears to be, we would love to see the RSI actually get into overbought conditions. Now, that said, I wanted to look at the big four that we're working with here on these four watch lists today. So I wanted to highlight quickly just how some of these groups look. So here's energy. We're going to take a look in energy today. I'm going to clean this up a little bit. we're going to see that now, granted, energy's move has been good since we broke this downtrend line that I just removed. Notice the 20 period simple moving average crossing the 50 to the upside. We just tested this 20-day yesterday with our open. We had a nice gap higher open in energy as a space and then ran to resistance. This could be a spot we blow through with any negative oil headlines tomorrow. So if overnight tonight, if there's any additional detail on lack of a deal and we expect to see oil continuing to rise, don't be shocked if energy continues to rise higher as well. So this is an improving group, trending bullishly now based on the 20-day moving average having provided some support. Could be due for a little bit of a pause. Other areas in the market we're watching are industrials is another. You can see that we did break our short-term downtrend, and we may have, depending on how you look at this, everybody, we could be considered to be at the same levels of resistance, right? We've pushed into this level before and have pulled back. Some traders would say that's appropriate, but how about this downtrend line that we've taken out? And now it looks like we've got a bull flag in development as we speak up here, and that could also be the case, right? So the process that maybe stands out the most in industrials is when we look back and remove the 20 period simple moving average. Look at how stout the 50 period has been. This appears to be the most important of the moving averages for the industrial space. One of the other takeaways here, notice horizontal support provided. Horizontal support was held here right around 1430 on this index, this sector index. And then we also ran to resistance at around 1490, broke through there. And as I extend this line, well, we should not at all be surprised to see that our low in the weakness we got coincident with former resistance, potential support. So all of that played the way we may have expected in industrials. Now, if we move on down the line, we'll skip over discretionary, which does not seem to be trending. The same can be said about staples, consolidating, hanging on to the 200-day, but not trending. Now, here in healthcare, we do have a group that is moving to new highs, commonly utilizing the 20 period moving average. I'll put that back up and see how well that has been working for us since back in late May. And only brief instances below the 20 have been really opportunities for participation. Now, the action today showed a new high and a doji at the close. We might see a little bit of bleed through in healthcare back to the 20-day moving average for a test. Keep that in mind as we consider our new opportunities for trades, example trades that is. And then I wanted to also point out the strength of financials. Many of you have been with me on this ride for a while, dating back to all the way when we broke the downtrend. We talked about how this was improving and we wanted to see some continuation. We got exactly that. Matching lows back here, we took off. In fact, I remember posting on X the day we did this move where we tested that gap low, and I wasn't certain it was going to hold. I was asking the question, hey, is this a level where we could get a bounce? And boy, did we. Broke the downtrend and have just been riding the 20 period ever since. That has been really wonderful for financials positions. So we'll look in financials as well. I've got, I don't know, 5, 6, 8 possibilities today that could be example trades. So we're going to look at those here in the second half of the session. But we're going to spend a brief minute looking at what's been done over the last week in this class. So let us go to our monitor page. We're going to go to the account statement. And really the only thing we need to look at, these last two trades from the 11th and the 6th on Cisco and Valero respectively, we're not going to need to pay attention to. Those did not occur relative to this class. What did occur relative to this class last week, we got stopped out on a position in Kraft Heinz. We added a position in ROP. We sold for profit position, a portional position in Zebra. We'll look at that. And we got stopped out of CVS. So let's start with CVS for a quick look. All right, so I'm going to put up my moving average 200-day. And we're going to talk briefly about all my moving averages, what happened with CVS. We took a loss of 12.0880 cents. Now, I'm bringing this up because our loss exceeded our $1,000 target max loss scenario. But the reason is, everybody, because we had one of those instances where we disclose each time we place a stop order. You've all heard me say it. We can't guarantee price when we have a stop order. We have gap risk to be aware of. That's exactly what occurred here. We had closed on the 4th up here. We got to close at 104.42. We had built in a stop that was above our open trade on the day following the earnings announcement, and that gap lower led to us being executed essentially at market open. So that's why we ended up taking a $200 loss beyond our max comfort zone. So even though we built this trade the way we had comfort, we did not overinvest. According to the math we did, we only had 80 shares. Had everything gone to plan, our exit would have left us maybe losing about 1,000. We ended up losing another $200 more. Now the stock hasn't bounced or given us anything to look back and be mad about. There's really not a lot we can do with this trade other than have been willing to buy fewer shares. So keep this in mind, because inevitably, when I disclaim and disclose the risk factors of the stop order, frequently the pushback is, oh, it doesn't happen all that often. We don't need to worry about that risk. Well, guess what? We definitely need to worry about that risk. So always keep the opportunity for a gap situation to play out while you're holding your stop orders, thinking you're well protected. Recognize there is no guarantee that that traditional stop will execute at our price. So I wanted to make sure that we talked about that one here today. Okay, so there's the CVS. The other one we did that we got stopped out on was KHC. So let's quickly look at KHC. This one went a little bit better for us, everyone. We had decided to piece into this. We bought 200 shares in two separate lots. 100 shares each got executed at $24.77. We ended up selling half up there at 28, and then our remaining shares were sold with a stop on this day here when we closed below the 20-day moving average, and we got stopped out for what amounted to $19 of profit, 19 cents on 100 shares. So while that was less than ideal, the reminder that I have to give is that we were smart. We took profits on half of our position when it made that move into that upper level. That happened to reach our target. We got taken out, and then we remained with a stop order beneath the remaining shares. That's the key reminder. When you sell something for profit, great, pat yourself on the back, be happy about it, but make sure you take steps to have an exit strategy where you'll have comfort. And in this case, we walked away profitable because we did use that stop order. We would still be losing money on our profitable position had we not had that stop in. We would be hanging out here at 24.65. We would actually be down now on those remaining shares rather than positive. So positive takeaway from our management process on the KHC trade. Pleased with the way that one has gone for us. Okay, so we are now out of Kraft Heinz. And then, as I mentioned, we sold some Zebra, but we still have Zebra in the account. So we have a position that's been working well. Let's take a quick peek at Zebra. So here, this is precisely why we did what we did, which was to sell some, right? Because we know if we sell some and it goes higher, we were right to have kept some. If it goes lower after we sold some, well, we were right to have sold some because it pulled back. This way, we're participating in both instances, everyone. The only thing we might consider now is whether we wish to separate our exit strategies. We have a 15 share stop in, and that is well lower than where we finished today. We are giving up 70 points just to be triggering on 15 shares. So that would be the equivalent of $1,050 if we gave it all back and got executed at our stop price, which, as you now know, is again no guarantee. So what we may do now is keep a stop at this level, but we should probably separate the shares that we have and elevate an exit strategy for portions. So why don't we do this? Let's take, I'm going to close this all just for our visual purposes. I'm going to put a 10-day moving average on, and you'll see that even with a 10-day, I've got to give up 44 points to be triggering if I worked with the 10-day. But if I wanted, I could go even faster. Why don't we go with a 5-day here, everybody? Look where the 5-day resides now. Aha. Well, that is much, much closer. 374.17. Okay. Now, if we were going to do this by the letter of the law, which I do recommend, sticking with our plan, let's add in the average true range of $16.53. So we've taken some profits, but let's make sure we take more if we get under the 5-day moving average. So we're going to use the 5-day at 383.06. Excuse me, 374.17. I'm sorry. And for those of you wondering, I'm grabbing that from, you see right here where my cursor is? It's moving with the price on the day that I'm using the crosshairs, but as soon as I take it off, it now changes to the current 5-day moving average. So 374.17 minus my ATR, my average true range, which is 1653. And that gives me 357.64. Now that's still a lot better and a lot higher than my 313.58. So let's do this. We're going to change my existing order from 15 shares to 5. And this is going to be our walkaway trade, meaning if these 5 shares get stopped out, it closes our trade in its entirety. Hopefully they're shares we can stick with and the stock only goes higher, but this way we're allowed to elevate and separate our stop on the other 10 shares. So we're going to change this from 15 to 5. All right. And now we can write, let's go back to our, let's see, go back to the monitor page. And here I'm going to just right click, create close with stop. Change this from 15 to 10. Oops. And then let's do the math on that now. So again, if we're working from, or 357.64 is what the math said, excuse me. So let's do that. 357.64. All right, and that is good till canceled. All right, quick review for those 10. And there we go. So now, there we go. So we've got to stop way up here, right? And then one down here. Okay, and so this is a good management process, assuming that I mean, look at our entrance at 263, everybody. Obviously, we can't guarantee price execution near the 313, but we've got 50 points to work with. So we've got a really positive development here. The hope is that we never even have to sell those 5. You know, those could be something we change in the long haul, months down the road if this thing really breaks out. And I'll just point you to the longer term chart on this. Hey, this has broken a long range downtrend, right? Off of a double bottom. You've got a stock breaking to new short-term highs. This is the highest trade that we have seen in Zebra dating back to February of last year. So you're looking at basically the reversal of a 15, 18-month downtrend. So a really positive near-term development here in Zebra. More than anything, the process of management is the key takeaway on Zebra. Okay, so there we go. Let's jump back. Let's take a look at that ROP. We have given back a portion of that trade today. Now, one development I should point out, everybody, it is the 100 shares of ROP, but that was not the math we did. So it's important that we make sure we adhere to our situation. So today I am going to maintain our stop orders where they are. Okay, we've got to stop in here at 29.29. Was 1 ATR beneath last week's 20-day moving average. But the most important thing for today is to get to the proper position size. It should have been a 10-share trade, not a 100-share trade. So I'm going to right-click, cancel replace, and just change this from 100 to 10. And then first thing I'm going to do is place an order to sell for tomorrow's business the over purchased amount. So I'm creating a closing order to sell 90 shares at tomorrow's open. Now, I'm going to do that by using a padded limit. Our close today was $3.99. Our current bid is $391.51. I'm just going to use a nice even $3.90. And a reminder here is that as long as this stock trades anything over $3.90 tomorrow, we're out of those extra shares. Now, some of you might say, I want to be out guaranteed. I'll go with a market order. But remember, that does not give you any maneuvering around for price. So you have a little bit of risk to that extent. If you wanted to wait, let market open, and then place a market order, you might feel a little more confident with it. But always remember, a market order doesn't guarantee any price at all. So big step on the ROP trade is to absolutely ensure we're in the right position size. Okay, so let's go with that. There we go. We'll be out of those extra shares tomorrow. And then finally, we'll peek in on Dollar Tree, which has been working beautifully for us. We're up here hanging out, still holding well. So we have a bracket on this one, everybody. I'll remind you that the bracket is set for stop execution, essentially right around the 50-day, which is an ATR beneath the 20-day simple moving average. And then our exit above it is at 135, which would be a $25 profit target estimate. Now, we haven't gotten there. We've gotten close. Our high trade is 132. But because we built this trade with a best case scenario and a worst case scenario, we've elevated our stops along the way. Even if we get stopped out, we have a decent shot of being profitable on this trade. I'm going to leave the bracket as it stands, everybody. Okay. Yeah, Beth, I agree. No need to be greedy. We take some profits, give ourselves a nice little pat on the back, a reinforcement for what we've done. We do like to remind ourselves that process is going to be king. And when we get rewarded for the process we build in, we need to take advantage of it and keep doing it. This is part of the reiteration of our process. So by selling and taking profits and then elevating our stops and doing the same thing over and over, it becomes much more mechanical and far less emotional. Remember, that's the strive. That's what we're going for. The less emotions we have in our process, the better off we likely are. Yeah, thank you, Zink. I'm glad that one worked out for us on the example trade. All right, so Kevin, you mentioning one CTAS. Believe it or not, Cintas made it to my list today. It did not make it for the actual example trades, I don't think. Let me just double check my... No, it didn't, but it definitely made the list of stocks that are in uptrends trading over their major moving averages, and that's what we're working with over here on the left. So why don't we get started with some new examples, everybody? Remember, if you're new to this class, I do work kind of quickly. And for that, I apologize if you're trying to grab on to all the specifics about our process. Remember, we are working with a relatively basic portfolio. We're working to maintain individual stock. We're trying not to exceed the 10,000 share full position. I call it full position. That might mean full confidence to some of you. If your setup looks as good as it can, then some would feel comfortable with a full position size. But we're willing, when things don't look perfect or ideal for the trader, we take smaller positions so that we can participate but limit our risk. We try not to lose more than $1,000 on any one individual trade. And where possible, we're striving for risk of $1 to make 3. And all that means is we're just trying to take on a proper amount of risk relative to what our upside opportunity could be. And lastly, the general considerations, we try to work with the leading groups. And you saw me do that earlier. We looked at industrials, we looked at financials, we looked at healthcare, and we looked at healthcare and energy. Of course, the big four, right? So those big four in uptrends are in uptrends because the stocks within those sectors are in uptrends. And so we're playing leaders in leading spaces. Okay. So From the financial side, I got a couple of positions we're going to build here, a couple of example trades, and we will work quickly. For that, again, I apologize. First up is Progressive. Chart looks a little messy given what we've seen over the last, say, 2 months, right? But we've ultimately broken a good downtrend. Let me draw that in. Broken this downtrend, tested the same level. So it was a breakout and a throwback. Very common occurrence, right? Resistance is the line. So for here, all the way until we broke out here in June, it was resistance. It was red. And then once we traded above it, we could call it green and call it support, right? And then not only was it support, we bounced off of that level and have made higher lows since. Now it's pretty tight. This is a little interesting, not necessarily perfection, but if you back this one out and you were to look at the long range view, where you've got a 5-year weekly that I've just drilled into, boy, this is starting to look different, doesn't it? We're trading above that shorter term 20 period, or in this case, 20-week moving average. We're back above the 40-week moving average, but ultimately showing higher lows. And even if we did not make a move out of this range and above my long run 100-week moving average, which resides at 237, that's 25 points away. That could be the upside opportunity in the short run, but it doesn't have to be, right? We could also be looking at a much larger winner if this is actually taking out. I'm trying to get the right draw tool in here, everybody. If we ended up, looking at it like so, and we have absolutely taken out the downtrend, well, then we might be looking at a back to uptrending longer term situation. So, some traders might just trade this for the bounce up to the 100-week moving average, and some may be able to stick with it longer than that. All right. But what we don't want to do is be in this if we are suddenly back below that 20-week moving average, which is around 207, which means we've got very limited risk here, right? 207 is only 5 points away from where we are. So if we use that as our approximation and build in an ATR underneath this, we should be relatively all right. Okay. So at least comfortable with rather an opportunity. Now, we don't have to go full position like we mentioned. So let's use that 200 period moving average, a little down sloping here, but flattening out. And then we'll add in our ATR. So it doesn't work for that because 100 shares would be a little bit more than we would want, right? We would be looking at more like a $20,000 position. So we don't want to do that. So we're going to step in with a small position size, 25 shares instead of 100 would be pretty standard, but 25 will be about 5,000 worth or so, and that'll be comfortable for us. So we'll do this with a buy custom so that we incorporate our exit strategy. And we've determined we're going to buy just 25. Make sure that this lines up. Now, we're not going to set a target on this, everybody. We're hopeful that we can maintain this one. So we'll do a 213 limit for tomorrow's day only, and then a good till canceled stop at our 205.55. But if you're not new here, you've heard me say this many times, we don't like those 5s and 0s for our individual portfolios, right? We want to use stops that are beneath those round figures. So let's go down to 205.48. That's not a lot deeper, but it should give us a little bit extra wiggle room. All right, so here's our example buy for Progressive. It's buying 25 at a price not to exceed 213 with a very relative tight stop here, 205.48. All right, and again, that's one ATR, one average true range beneath the 200-day moving average. And then hit send on that, and we'll be good for tomorrow's business. Now, we reconvene next week. If we're trading up around 235, maybe we take the opportunity to take our profits and move on. We'll see how that plays out, though, okay? All right. So there's Progressive. Now I have another one in financials, but I want to expand so that we are looking at adding as many examples in as many spaces as we can. So let's go to energy. I have one in here that we've actually traded before. It's OKE, One Oak Energy. And the reason is, boy, look at the development on this one, everybody. Long range trend again. Huge move that this made all the way up to that 118. But once it got out of that big, big, deep pullback, boy, it has been solid. Now we have seen a little bit of this action in here, right? And it looks like we've run into this 95, 96 zone up above. So this is what we're monitoring for. But more than anything, the thing that stands out on this chart is the beautiful movement with just that 50-week moving average. If I took all the other stuff off and just drilled in, 50-day was support, it was support, it was support. Uh-oh, it's resistance until it's not, right? And so now we're back above it. Well, we've got a lot to work with, but that's not a huge move away. Yes, it's more, 10 points isn't great. We would love to make sure that it holds up at 81 and change, but let's go ahead and stick with the 50-day as our exit strategy. In this case, the 50-week as our exit strategy. We'll take a smaller position size because we're going to give it a little bit of wiggle room here, right? If we give it 10 points and we own 100 shares, well, then we've got $1,000 of risk. That's what we want to make sure we try to stick away for, steer clear of, excuse me. So I am going to add in the average true range here, but I'm going to do it on the weekly chart. So remember, this is the standard weekly range that the stock sees, $6.03. But we can't likely go with 100 shares. So we're going to go kind of 50. How about 50? I think 50 makes some good sense here. So we'll do a 50 share purchase with an exit that is $6.04 under 81.26. So that gives us 75.22 for our exit strategy. And our entrance is going to be at a padded limit of 92. And 50 shares with that means we probably we should not exceed our risk comfort. So 50 shares and giving up possibly $15 a share should be about $750 to $800 in loss approximately. That's kind of what we're striving for there. So let's go ahead and we'll go ahead and be a purchaser here, essentially a holder. And on the daily chart, just notice where that 200 period resides. That's pretty much what we're looking at for the 50-week moving average, right? Those are very coincident. And I've got to be honest, when you look at this over a 2-year basis, everybody, sure does look like a very corrective phase is still in play. And all of this is just consolidating and digesting what's been a wonderful move to the highs, everybody. This thing is added 50% up in very short order, relatively speaking. And if it is simply consolidating, well, then perhaps the path of least resistance is to the upside here. Okay, so let's build this one in. We can do it on the daily chart here, but we'll do a buy custom with stop. Once more, we're going to do 50 shares. We're going to do a limit not to exceed 92. So it's a slightly padded limit. And that's good for tomorrow. And then our stop is good till canceled at 75.22. Okay, and remember that stop doesn't guarantee any price. So, and if we closed at 80, 82, 85, and then one morning we open at 65, yeah, we're going to get execution close to 65, unfortunately. So, not a terrible plan here. Now, Rita, your question isn't bad either. This is perfectly appropriate. Let's address it. Your question is, isn't it better to wait for the breakout of the channel? I guess that all depends, both Rita and Jay. We can talk about it. In my case, I'm wanting to get a trade on. One, I want trades to manage. I want more to review with all of you weekly so that we have discussions and topics. Now, if you were trading the trend and waiting for the breakout to validate it, yeah, sure, I could absolutely understand a trader being patient, waiting for a breakout of the channel, and then taking the trade. But this is also showing evidence of a longer range trend shift. So while we are in consolidation, what stands out to me, and you can't really see it when I've got all these trades and orders on here, what stands out to me is just how nicely this thing has acted since taking out the 200-day moving average. It's been a little bit of back and forth. I want to give it as much of a wide berth as I can. That's why why I'm comfortable taking position. Two, we're taking a position with amount of risk that if stopped out, we're comfortable with. But I feel like there could be an opportunity for that breakout. Am I early? Yeah, no doubt. It's in consolidation still. But the development of the new trend is fairly strong, is what we're seeing here. And that's why I'm willing to take this one. So I don't know if that helps you out, Rita and Jay, but as always, have a plan that works for you, be as disciplined as you are comfortable being with your trades, and then stick to that discipline as best you can. This, I can absolutely justify being patient and waiting and maybe even placing a buy stop on a close over 96, right? That would maybe be better for some of you who are shorter term trend traders in particular. My belief perhaps is that this is a longer range development and we've got something bigger to work with here, hopefully. Hope that helps, guys. Or gals, or all. Hope that helps. Okay. Let's keep moving here. I've got okay, let's jump to see what else we've got. Industrials. Which one is this? Yep, industrials. All right. Now, I've got PCAR in this one. Oh, there's my Cint. Yeah, you mentioned Cintas. This is why Cintas made the list, everybody. You can see how it gapped higher. First of all, it ran beautifully following its earnings, took a quick breather, built a very sharp bull flag before rallying to peaks up there at around 219. And now it's pulled back to the 20 period moving average. And some traders could build a trade against the recent low here. That makes sense to me. We're going to use PCAR, PCAR, and I think you can see why, everybody. A nicely developed short-term uptrend that recently took out prior highs, former resistance, potential support. And what I like about this one from that trend management is that this line is below the 20 period. And I think it's going to be kind of coincident with our ATR. So 130, let's see here. Let me put this back. 131.15 is our 20-day. And our ATR is 393. So that means our exit should be 127.22. This line, according to the detail there, 128.80. So we would actually be a little bit beneath that line. That's not bad, right? Now, we've been stopped out recently working with 20 days. Some of you would say, yeah, I'd prefer, Kev, to use the 50. And some would say, I'd prefer to use the 200. And either of those would be fine as well. Don't hesitate to back this off into the weekly view. Here again is the 50-week moving average. And look at how stout that's been now, right? So if we drew this from just a visual, you took out the downtrend and it took off. We came back and had to test these prior highs. We did that, held it, moved to new highs. This moving average could be the winner for you, everybody. That's one way to look at that, okay? So whether you choose to work with it on a 50-week moving average, you choose to work with it on the 20-day, for our example purposes today, we're going to use that 20-day. Now, on that one, if we are entering at 133 in a padded limit situation, then we are risking just shy of 6 points per share, but we can't own 100 shares because 100 shares would be too much. So we could sustain the risk of 100 shares, but we couldn't sustain the position size of 100 shares. So I'll go ahead and do this one for 50 shares. So we will right click, buy custom with stop, drop this down to 50, put our limit for tomorrow. Again, it's a padded limit above today's close. And remember, anytime we put the limit at 133, in this case, 133 or better. So as long as tomorrow at any point, if it opens at 129, we're going to execute pretty close to 129, right? So we're not saying we're willing to pay more, but we are willing to be a buyer as long as we can get in for 133. All right. And then thereafter, 127.22. That needs to be good till cancel. All right, let's confirm and take a peek at this one. So buying 50 puts us on the table for $6,650 total. And if we ended up losing on that, 578 approximately on 50 shares. So that's a fairly comfortable amount, right? If that was 100 shares, we'd be looking at $578. It's exactly approximate half of that. So, just shy of $300 as an approximation of our max risk tolerance on this one. Okay, so we're ready for the day tomorrow on it. Now, we're not going to have time, unfortunately, for more examples, but I do want to show you the charts of the two healthcare stocks that made my list today. First one is Eli Lilly, which is still in a bit of a rangy situation over the last few weeks here. As you can see, we've held the 1110 level. Notice that we did get below it here, but it was intra-period lows, right? You see that candle there? Below intraday, ultimately closed right at it. And then now the lows of last week were right in that similar zone. So I thought this one was interesting. This one might be a buy stop situation, waiting for that move through 1235 to the upside to be a buyer on a breakout trade instead of patience here. So that was one for example purposes that I was giving thought to. And then the other one was Baxter, because Baxter has shown a fairly significant move, not only the move off the lows. Oops, let's draw that in just to give you an idea as to what you're seeing to the last trade today. How about 75% over the last 90 sessions, so 4 months or so. Fantastic move there. But I like this one. This one made the list because we had some former resistance through here, right? Now potential support, coincident with the 20-day moving average, and it looks like it's building a bit of a bull flag as well. And so some traders, you might take that one based on the flag, might take it based on the lowest trade since the gap, which was ballparks to about $26 or so. That's one way that some traders might manage that. And remember, whatever level you're selecting, a 20-day, a 10-day, a 5-day moving average, always try to incorporate some calculation, some measure of volatility that'll allow you to stick with the trade should it move against you. Okay. All right. So we've covered quite a bit today, everybody. I want to thank you all for being here. I didn't mention it till just now, but we have a survey opportunity in the chat. Would love to hear your feedback, everyone. It's valuable to me. All of your comments come to me directly, and I do get to read those. So if you take a minute to share those thoughts, I'll take a minute to incorporate them in subsequent classes. With that, big thanks to JB. Big thanks to my production team as always. I am back tomorrow morning with all of you for Trader Talk, kicking off at the opening bell, 9:30 a.m. Eastern. Follow us on X, James Boyd, CS, Kevin Horner, CS. If this was helpful for you, hit that thumbs up button for me below. We get this reviewed into the archive as quickly as I can, and that thumbs up helps us out to get out to the masses, get available to even more viewers who might benefit from seeing this type of content. So, as always, big thanks to all of you. I really appreciate you joining today. Have a great rest of your Tuesday afternoon, and let's reconvene tomorrow morning for Trader Talk in today's market, bright and early, 9:30 a.m. Eastern. Thanks, everybody.